Hey, Craig,
Yeah,
can you mute your microphone?
yeah, you bet.
All right, thanks. Good morning, everyone. Thanks for joining us today. This is Matt Tour with Insurance Agency Marketing. We'll be joined here shortly by Craig Geiger, and he's our Regional Sales Director from Lincoln Financial Group. So good to have Craig on here in a little bit. But today we'll be going over a brand new strategy that was introduced last year on the new Fidelity strategy through the Lincoln Financial Group. It's on a lot of their products. The OptiBlend series is the main plan it is available on, and we'll be discussing some of the programs to go along with that. I know it's a really exciting strategy that has come out in the last 6 months for accumulation. I like it because it's a 1-year reset. You have 100% participation, really a great combination on that contract. And one thing I'm going to do at the end of this meeting, when I go through and make phone calls to everyone that's attended today's webinar, I'm going to go ahead and send you an email that includes some one-pagers on the Fidelity strategy, the S&P uncapped strategy with dividends. It's going to have a lot of good pieces I'll be forwarding on, and I'll get those out to you here this afternoon as I'm going through the call list based on attendees for today's webinar. So make sure you keep your eyes open for that here this afternoon. We'll be glad to get that in your hands. And any questions you have along the way here on the webinar, be sure to get those asked. We'll go ahead and get those answered for you based on any questions that do come up based on the programs themselves. I know we got some great business builders we do through IMAS. We have our referred producer program. Refer agents to IMAS. We'll pay you for the referral. When they get contracted, you also get a 20 basis point override on their business. For as long as you're licensed and they're doing business, you're good to go. And then marketing reimbursement, reimbursed $100 for every $100,000 of indexed annuity premium towards marketing. So if you're doing mailings, seminars, website situations, we'll help you with those costs. So a great way to have IMAS help you out with building your business. I know we've introduced a couple new layers on the new producer bonus. We now have a $750,000 level and a $1 million level. It's a great way to grow your business. Good ways to, for us to help you with expanding what you're doing in the field, and good ways to put cash in your hands, help you out with different seminar programs. We have a radio show, can help you out with the development of that. Social media campaigns, a lot of good information you can take advantage of on this sheet here. And we've got different trips, a lot of good stuff that we now offer through IMAS, and you get your first 180 days of being licensed and qualify for one of these levels. So if you're at the $500,000 level, 3 months into it, and you want to hit that 750 level or $1 million level, you can hold off and claim some of those higher end viable items that are available to you based on your early production through IMAS. So really a good way to get things going and qualify for some additional incentives based on your production. We got great back office support here at IMAS. I know we have a great new business team. We've got a great contracting team that can help you out with, all of your contracting needs to start with. And then once you get hooked up with the carriers, we're going to help you out with, getting things going on the business side of it. And then once you do right business, we'll help you getting that business through the channels. I know with all the different requirements now on the new business side is turned a 2-page app into a 50-page app. So there's obviously a lot of information that goes in these applications. They're going to help you out with that whole process. We do have a great e-app available on our site through Firelight. A majority of our carriers utilize that. So you go on our website, do your applications right there in that Firelight area, and then we'll go ahead and follow through on those based on that information. So really a great combination there. Got a great creative team that helps you out with your business. If you're doing any type of advertising, mailings, emails, website development, if you want to redo your business logo, maybe you want to do some business cards, change your stationery, whatever you want to get done. We've got a great group of individuals that work on that creative team. I know we're consistently putting together different advertising pieces, different ways for you to get in front of more individuals. So if you want to do some social media advertising, it's a great way to get in front of a number of people with a very low cost. I know we've got a great turnkey Social Security seminar program, very economical, $2,500 guarantees you 25 buying units to be at your meetings. A great way to get in front of people at a very economical price. So definitely something to take a look at based on what we're offering here through IMAS and some of the programs we do offer. We got a great website. You can get on at any time. It's available 7 days a week, 24 hours a day. You can go on there and take a look at a lot of the programs we have available on that, and it's a great way to pick up supplies, get information you need based on your needs in the field. Maybe you want to look up an AM Best report on a carrier. Maybe you want to go to a state insurance department website, or anything you really need in the industry. Tax questions this time of year, whatever it may be, we can help assist you based on that. We also have a great software program called the Retirement Analyzer. I know Marcus Solar in the office helps run that. Great program to utilize to really give your client a great picture of where they stand today for retirement, what they're going to need to do in the next few years to ramp up for the retirement, additional savings, life insurance needs, long-term care combinations, whatever they may need. This software program is going to be able to show them where they're at today and show them where they need to be in 5, 10, 15, 20 years. A lot of people utilize this. It's a free program we offer through our agency here, and a really a good piece to utilize there in the field. So that's something you have some interest in taking a look at. Be sure to give Marcus a call. He would be glad to help you out with that, and you can get things rolling. I know we've introduced our wealth management side of the business here in the last few years. I know we've seen a big increase in our agents getting their Series 65, working on that security side. If that's something you have interest in pursuing, I just launched a little poll here. Just mark off yes. We'd be glad to get you a phone call out on that side of it. I know that over our top 10 producing agents, 8 of them also have their securities license. So, I mean, it's really a nice combo when you're doing any type of meetings, seminars, anytime you can offer your clients more programs through your office and not having to send them down the road, you're going to have more of that client's business. You're going to keep that client as yours, as opposed to them going down the street, doing business with someone else, and then a couple of years down the road, they pull the business out of your group and send it to them. So we don't want to see that happen. We want to see you keep as many clients as you can. That's why I think having a Series 65 is really a valuable piece to have these days, especially with the changing regulations, the Secure Act, some of the legislation probably coming out in the next few years. Definitely something to look into based on, having that available and having that for your clients. So definitely keep that in mind. We'll keep this poll open for about another 20 seconds or so, but we got some great platforms to utilize on the investment side. We've got a process to go through to get your Series 65 test taken. We help you with those costs. We help you out with a lot of that information. And it's a great way to really be well-rounded on both sides of the business. And I know that, as I mentioned, most of our top producing agents now also have the Series 65. They do have the securities licenses, and they do business on both sides. So really a good feather in your cap there. We'll go ahead and close that up. But if that's something you have interest in, and you can talk to Charles or Michael in the office. They'd both be glad to help you out with that and be able to get you going down the right path for that type of situation. I know we typically put on our Life Annuity Academy. It's about 3-4 times a year. We've been a little bit delayed in 2020 in getting one put together, but we do have one coming together in May. I know we have a 2.5-day meeting. We're going to be holding it in Des Moines, Iowa, with Athene, and we're going to be doing a little co-op on that one. But if you have interest in getting involved and attending one of our 2-day trainings, and you'd like to come out to the main meeting, I just launched a quick poll here. Definitely mark off yes, so you do have interest in attending one of those, and we'd be glad to get you on the list. Again, that meeting is going to be May the 6th through the 8th in Des Moines. We take care of your travel, we take care of your lodging and your meals, and we'd be glad to get things going with you on your annuity business, help you out with that, help you out with life insurance. I mean, we cover a lot of different information on these. We go over a lot of different carriers. We go over some strengths of the different companies. We go over different index strategies, large life cases, business insurance concepts, a lot of different stuff we'll cover at these meetings. We bring in typically between 3 or 4 of our top producing agents also. They'll be going over sales ideas that they have, ways to get in front of more clients and close more clients. That's what it really comes down to. So that's something you have interest in. Mark off yes. I'll leave this open for another 10 seconds or 15 seconds. We'd be glad to get you signed up, and we look forward to having you in. I know we'll probably do another one of these meetings sometime in, say, August or September, and we typically do one near the end of the year in October or November. So definitely something to keep in mind based on that. But that's something you have interest in. We'd be glad to get you set up for that. I know we're doing a really good meeting we have got coming up in 2021, one of our IMAS retreats, and it's going to be in the Puerto Vallarta in Mexico. It's going to take 3.5 million credits to qualify. Qualification started July 1st of 19. It runs through December 31st of 2020, so you have 18 months to qualify. 3.5 million points. I know we're expecting between 60 to 80 people qualify for this, so it should be a really good, beautiful trip down there in Mexico, and we look forward to seeing some of you down there in those areas. That's going to be in March of 2021. We also have an extended trip for people that do large amounts of business, 6.5 million or more. You do have instant qualification if you hit 8.5 million. That's to Punta Mita. It's an elite area down there at the Four Seasons Resort in Mexico. It's just a short ride from our other location there, Puerto Vallarta. So it should be a couple of really nice locations there in Mexico to take advantage of. If you do have interest in qualifications and so on and so forth, definitely give us a call. We'd be glad to get things going on that end and get things moving. I'm going to go ahead and bring Craig up here. We'll get you over to Craig on that end of it. And I know that Craig's got some great information to go over on Lincoln Financial Group. He's a regional sales director with Lincoln. I've known Craig for a number of years. He does a great job in the field, and he's going to be going over the OptiBlend series with their new Fidelity strategy, and they got some great other information on some other producer programs they also have available there in the field. So welcome aboard here, Craig.
Thanks, Matt. I appreciate it, and thank you, everybody, and thanks for jumping on today's call. Really, what I wanted to do is, quickly just kind of go over, where Lincoln fits on the accumulation side. I think if you're going to ask me where does Lincoln really shine the most, it's definitely on the accumulation front. We definitely have very competitive income strategies, but in terms of where we see the most growth over the last couple of years, it's definitely been on the accumulation side. So the OptiBlend Index Annuity Series is the one you most likely be looking at through IMAS. It comes in a 5-year, a 7-year, a 10-year, and then a 10-year with a bonus. Everything on all of the OptiBlend Index Annuities, everything is a 1-year strategy. So we don't have any 2 or 3-year strategies. So everything at Lincoln is 1-year strategies, and we're competitive really in all of those strategies, as well as having a strong fixed account. But the one I really wanted to talk about today was the 1-year Fidelity AIM Dividend PAR account that we launched back in September. So this is a proprietary index we did with Fidelity, and the reason we built this, and this is a good year, almost 15 months in development stage to develop this index, because We really wanted to bring something to market that's different and unique and thinking outside the box, if you will, in terms of an index design. And what I would ask you is these two questions. Do you think, one, we eventually are going to come out of a bull market? I would think that everyone on this line is going to say, we're eventually going to correct. It's just a matter of when, not if. Second question I would ask is, do you think we're going to be in a compressed, low rate environment for a while? And I would probably say we probably would be, for an extended period of time anyway. We don't know what's going to happen in the future, but based on where interest rates are, they've been low for a while, and they could be low for the extended period of time going forward. But more importantly, when you put those two variables on the table, historically, what has performed the best when those two variables are on the table? And that's blue chip dividend paying stocks, which is exactly what this strategy was built around, that type of a design, that type of discipline to be focused on blue chip dividend paying stocks. So what makes this very unique is this is like really built to the environment that really we're probably going into, not the environment that we've been in the last 10 years, which has been great. But when you take into account those variables, this strategy was really built for this environment that we're going to. So again, it's going to focus on blue chip dividend paying stocks. It's also going to have a treasury component as well as a cash component to offset the volatility. So why Fidelity, first of all? Why do we choose Fidelity? Well, obviously name recognition is huge. And obviously we chose that because of the name recognition, but it wasn't just that. It's also because Fidelity has one of the largest research departments in our industry. And we really wanted to access that intellectual capital by not only building this index, probably looking at future indexes in the future. And in terms of what makes up the index, it's actually 125 high dividend paying stocks, as well as that treasury component that I mentioned. Now, what's really interesting about this index is there's complete transparency with what's in the bundle of the 125 stocks. You actually can get a list from Matt that actually breaks down all the stocks that are in that 125 and the percentage weight that it actually makes up in the total index. So you're going to be seeing stocks like Apple, Microsoft, JP Morgan, Home Depot, Starbucks, etc. So you're going to have complete transparency of knowing what's in that bundle of stocks. So what happens is on a daily basis, Fidelity is going to be looking at that 5% volatility target. So they're looking at that on a daily basis. On a monthly basis is when they're going to shift things around if there's a lot of volatility and shifting money between the treasury side or the bond side to the equity side. They're going to be doing that on a monthly basis. And then on an annual basis, which is kind of unique, is at the end of that year, they're going to look at those stocks and say, hey, maybe 10 of them underperformed our model. So we're going to replace those with 10 new ones going into the following contract year. And then you'll get a brand new list of what those 125 stocks are going to be in that stock bundle. So if you look at the strategy just going back 10 years, it averaged almost a 7% return, which is really a great return considering the market environment we've been in with pricing and in terms of how well the market's been. But I want to take a step back and really look at past periods of time in the market. If we look at the 1930s, in the 1930s, in that decade, dividends were positive in that decade, equities were negative. If we go to the next decade, which was the 1940s, dividends made up between 60 to 70% of the total return of the market in that decade. And if we just go back 30 years, just going back 30 years from now, if you took out dividends in the performance, the return would be 50% less than it would be without the dividends. So it makes a significant difference in the total performance of the index when you do in fact include the dividends. So when you look at the strategy itself, another thing I want to point out is it's not just the fact that we've got Fidelity. It's not just the fact that this is a very competitive strategy, but it's because it's a proprietary index that we actually have with Fidelity. So only we have this index, and it's only available on the OptiBlend Index Annuity Series. And because it's a proprietary index, it allows us to have more competitive pricing. So as an example, on the OptiBlend 10, which is our number one selling contract, right now with that Fidelity strategy, you can get 100% par, 100% participation on that index. We also not only just have the Fidelity index, but we also have a very unique index as well. And if you look at volatility control indexes, we all know we've seen a lot of vol control strategies come out over the last 5 or 6 years. Most of them have an equity component, which is of course in the blue there, and they also have a bond component. Now, what we found is if we look back at history at those strategies, a lot of times if we illustrate going back 30 years, the bond size, of course, can illustrate really well because interest rates were low or high and they went low. So of course, it's going to show pretty well. But going in the future, based on where interest rates are now, and if they're going to be low for a while, is that really going to be a replicatable process in the future? So what we decided to do is when we came out with a volatility control index on the S&P 500, we decided to take the biggest governor on the performance, and that's the bonds. We took the bonds completely off that strategy. So it's S&P 500 and a cash account that S&P will shift to if their volatility gets above 5% or greater. Now, what makes this even more unique is you actually get the dividends included in the performance in that strategy. So really now you've got two different strategies, the Fidelity being the unique one and the S&P daily risk control being the other, where that's a volatility control index where you get 100% participation minus a small spread. We also have the typical 1-year S&P 500 cap, which is very competitive, and you also have access to a 1-year S&P 500 par account as well. So it makes it a very unique value proposition at Lincoln that we have not only one good index, we got multiple good indexes. We're competitive in all of them. So just to kind of give you an example of that daily risk control spread. So again, we talked about the Fidelity strategy in the beginning. That's the one that has 125 dividend paying stocks, has a treasury cash component. That's actually a par strategy. Currently on the OptiBlend 10, you get 100% par. On the 1-year S&P 500 daily risk control spread, which is our other competitive and very popular index, currently the spread on that strategy is 2.45. So just to give you an example, so if we looked at 2017, that you can see there in the box below, the S&P 500 did 19.42% return. That index actually did 14.72. That's almost a 75% par of what the actual S&P did. So it really does give you the opportunity to get potentially more upside potential while still having that downside protection. And of course, you can see in 2018, when the S&P was negative, the S&P Volatility Control Index was actually positive by 61 bips. So just another example of not only having one good index, but multiple good indexes all on the same product series with our OptiBlend Index annuity. So with that, I'm going to throw it back to Matt and see if there's any questions.
Yeah, so I'm going to launch a quick little poll here. If you do have interest in looking at more information on Lincoln Financial Group, I'd be glad to get the information out to you. We do have some more time. I know you had mentioned, Craig, that you've got some producer programs going on here in 2020. You going to review those real quick?
Sure. So we have a top producer program called Premier Partners. And if you do $3.8 million in annuity production, and that's, of course, index annuity production, you will qualify for the Lincoln trip with your spouse. And the other thing you also get access to, which is becoming harder and harder to find, is you actually get access, if you want, to our deferred compensation program where you can allocate up to 80% of your commissions to. So a very, very unique value proposition outside of not only having competitive products, competitive pricing, but actually having a very good trip and actually getting access to a deferred comp program, as well as also getting marketing dollars as well. So just based on some of the trips that were shown earlier, not only can you get one trip, but potentially with Lincoln, you can get two. So just another example of, IMAS and Lincoln kind of working together is a great partner for you and your business.
Good. Yeah. I know that anytime an agent can qualify for two trips with the same premium, that's a really nice doubling down, as they say, based on those trips. So it's a great combination. Now, I know an agent just asked, and based on 2019, you guys have any numbers on what your S&P index did last year based on the 2019 results?
Yes, great question. So when we look at September to December 31st on the Fidelity strategy, it actually did almost a 4% return just in that time period. And year to date, it's almost done a 2% return year to date already, even though the S&P is down 3%. So it's very competitive, not only last year, but it's already been quite a good performer so far this year. So just as an example on the Fidelity strategy that I can share. So
sure. How about the 2019 and the S&P volatility control strategy? Did that have a pretty good year last year?
It did have a good year last year. I don't have those numbers in front of me, but as an example, the average spread on that was around 2%. So the great thing about that strategy is, again, is the transparency on that index as well, because no longer do you have this buffer that's that bond that's that bond component that can really take up a lot of that premium in that index? As an example, a lot of volatility control indexes have 40-50% of the money sitting in bonds, so you're only getting 40-50% of the time and maybe in equities. Whereas with our index, our volatility control index, you get 100% S&P 500, and then you have a cash account. So if volatility gets high, they can shift money to cash. Once that settles down, it can go right back to the S&P. So it can react quicker when there's more opportunity. Of course, you potentially can get more upside potential as well.
Sure.
And you get the dividends included in the performance, which again is another layer on top to get more upside potential for the client.
Right. Well, that's good. And then I know we've seen a good trend lately on companies going more towards accumulation. I know we've seen a nice increase in business with Lincoln with IMAS over the last year. How much was your business up in 2019, Craig, based on Lincoln's business?
So we were up almost 100% from last year. We up over 100% from the year before. So in terms of Lincoln, we are one of the fastest growing index annuity carriers in the industry right now. And I think we're there because not only are we really designing our products to be in today's market, but to really add a lot of different index choices and a lot of stuff that's outside the box in terms of income rider design, in terms of new indexes, in terms of pricing. I think our compensation is right where it needs to be. We have a top producer program. And I think with the Lincoln name, I think with us being an A-rated carrier with a 91 Comdex score and having a mind share with our brand, I think has been very, very important.
Right, right. Couple questions have come up, Craig. So one came out that are you limited on the strategies you can pick when your client buys a policy, or are you pretty much unlimited? You go to any strategy combination you want?
You can go to any index allocation you want to do. So if you want to go 50-50 between the vol and the Fidelity, or you want to go 25 in each for the index strategy, you can do that too.
Okay, so you're unlimited based on, you can put your monies on any strategy combination you want, but you have to have at least, is it 10% or is it a dollar amount in each one?
It's 10% is the minimum.
10%. Okay, that sounds good. What's the fixed account paying right now on the OptiBlend 10?
So currently the fixed account is at 1.4%.
Okay.
So just to kind of give you the pricing right now on OptiBlend 10 on $100,000 plus premium, you get 100% par on the Fidelity. Mm-hmm. You get a 2.45 spread on the uncapped volatility control index, is the S&P, the one that includes the dividends. You get a 4.25 annual point-to-point cap, and you get a 40% par on the S&P.
That's a great combination. That'd be probably worth their while to maybe do a 25% amongst those four.
Right.
So I got another question that came up on the existing contracts on the Opti series. Is Lincoln giving the client the option of putting money into the Fidelity strategy, is it only on new contracts?
It'll be available for any contracts that were issued after the index issued, which I believe was early September. So if the case was issued before that, then no. If the case was issued after the Fidelity became available, yes.
Okay, so basically if you had a policy that's issued before that time period, it's
before
not
the index
available
became available, then no, it would not be available. Correct.
Right. So anything moving forward, policies issued recently would have it available on renewal.
Correct.
Well, good. On percentages of where money's going currently, do you guys have any type of a breakdown? Are people putting most of their money in the Fidelity strategy? Are they kind of splitting it between S&P and Fidelity? What have you been seeing lately, Craig?
I'm seeing a couple of different combinations. So right now, in terms of the overall allocation, and mind you, Fidelity's only been around since I think it was early to mid-September on. So it really hasn't been in the market that long. But in terms of the waves it's already made in the industry, it's been huge. It actually makes up over 40% of our total allocations in the OptiBlend currently. But what I do see is a lot of advisors will use the Fidelity strategy, and they'll use the volatility control index, and they'll use the par. And I see that as a 60-20-20. I see that a lot, where they do 60% Fidelity, 20% vol, 20% par. But I've also seen a lot of 50-50 with the Fidelity and the vol. So it's kind of a mix in terms of allocation mixes that I tend to see a lot in the field. But the Fidelity strategy is definitely growing in terms of the percentage allocation that it makes up in the total product. So
right. And the thing I like about it, all your strategies are 1-year resets. Your clients are going to, lock those gains on an annual basis. They're not going to have to wait 2 years, like if they had a big year in 2019, where the market was way up, which it was last year. They're going to lock that gain in. They're not going to run the risk of 2020 being a bad year, taking those gains back away from them because they've already locked in those gains. So that's a great feature to have, I think, on those programs. Another question that just came in here, Craig. Let me read this one off real quick. Let's see here. Can you go back to that slide, Craig, that showed the different strategies that are available?
There you go.
Okay. So as you can see, we've got a fixed account, and we've got 4 different different index strategies. You got the Fidelity strategy, and then you got 3 different S&P strategies. And I think the most consistent returns I always like is the cap. But with the participation is rate as high as 40, I also like that strategy. I mean, I like the mix. I mean, I like to go 25% in each one. And that way, every year, typically one strategy is going to outperform the other ones. So that way you have all your bases covered based on those strategies.
Right.
I like that spread. And got another question just came in from Kansas City, Craig. They want to know your prediction for Sunday.
Oh, Chiefs all the way.
Chiefs all the way. That's what we like to hear.
So, I want to see Andy Reid get his ring. He deserves it.
Yes, he does. He definitely deserves it. So we'll put Craig down for the Chiefs. Otherwise, anything else you want to wrap up with today, Craig?
No, that was it. Thanks so much for everyone being on the call, and have a great weekend.
You do the same. Appreciate your time. Appreciate everybody on today. We try to keep these to about a half an hour in length. As I mentioned, I will call everyone here this afternoon. Go ahead and forward that information that Craig had forwarded to me on some information pieces on the plan. If you have interest in getting licensed and contracted with Lincoln Financial Group, we'll go ahead and get that started. And that way you'll be up and running. Yes.
Hey, Matt, one last thing. One thing I didn't include in that email that I'll send you, I mentioned on the webinar that we have a breakdown of the stocks in the index and the weight that it actually makes up. I'll make sure I send you that document as well so you can share that with the advisors.
You got it. I'll look forward to getting that, and then we'll go ahead and get that forwarded with the other information. I'll just add that into the piece. Otherwise, everybody have a great weekend. Enjoy the temperatures. I know we're going to warm up here in Omaha this weekend, so look forward to that. And everybody enjoy the big game on Sunday. We'll talk to you guys later. Bye now.